Now that is a cheer as the market has its best performance since 2008. The best for some 6 years. The closing bell is ringing. Hit it again. I'm just going to get one. I'm just going to show you this number before I give you the date, because this is significant. The market is up 2.4%, a gain of 419 points on the Dow Jones Industrials. Trading is over. It is Thursday, December the 18th. It's a worldwide rally. The Dow is its best day of the year for the second time in a week, and the best in 6 years. Now look at the month, and you get a very sharp fall, and it comes back up again. What on earth is going on with this market? This is the one-year graph so far. Let's talk to Paul LaMonica, who joins me. Sir.
It's a bit dizzying, isn't it?
It's a bit. What's going on?
I think you just have right now euphoria about the Fed. Everyone is very excited that Janet Yellen has talked about being patient with rate hikes. There had been concerns that the rate hikes could come sooner in 2015 rather than later. Now it really seems that unless there's a shock in the economic data, the Fed's going to be on hold for the first part of probably 2015, and the market really likes that because they've just gotten addicted to 0% interest rates because we've been there since 2008.
It was a very good choice of words. Patience. Patience, you know, we're going to be patient. We can be patient in deciding the future, it was the words of the Fed. But that's a perfect word. It's a soothing word.
Yeah, I think she did a great job of reassuring the markets that she will focus on the data, but they're not going to be making any decisions based on the calendar or based even on what the financial markets want or think should happen. They're just going to wait, bide their time, and when it's the right time to raise rates, that's when they'll start doing it. Because in the past, the Fed has sometimes gotten burned from going too aggressive too quickly with rate hikes, and I don't think she wants to repeat those mistakes.
And you've only got to look at other countries that have done similar. You have Australia that did it. You certainly have the fiasco of the ECB, which started to raise rates. You had Israel that raised rates after the Great Recession, all of which had to reverse track.
Without question. And I know that Yellen is aware of that, and Stanley Fischer, who is the vice chair and who had been at the Bank of Israel, obviously aware of that as well.
We're going to talk about Russia in just a second, but I just need to put it into context. Does Russia play into this? I mean, or is Russia now basically its own side issue?
I think Russia stabilizing has helped. Seeing what's happened with the ruble has probably calmed down some of the fears about there being a possible contagion to Western banks. And Janet Yellen yesterday also said that any spillover from Russia would likely be minimal. So I think people are reassured by that as well.